the New Zealand Tech Podcast, brought to you by Gorilla Technology, proactive and strategic IT.
Hey folks, greetings and welcome along to the New Zealand Tech Podcast. I'm your host, Paul Spain, and great to have Ben Rose with us in the studio and Darcy Ungaro.
Thanks.
Ben, maybe a little introduction of yourself for listeners to know where you fit into this big wide world of tech and crypto and so on in New Zealand.
Yeah, sure. So I'm the GM of Binance New Zealand and Pacific Islands. So leading the local branch of the world's biggest crypto exchange. Been in New Zealand for 20 years now. So worked in TradFi, so banking, insurance, health insurance, life insurance. More recently, media and tech. So got a few views about what we're going to talk about.
You do indeed. Looking forward to hearing that. And Darcy.
Yeah, I'm Darcy Ungaro. I'm a financial advisor and host of the NZ Everyday Investor podcast, where we talk about things like crypto, property, shares, managed funds, and everything in between.
Great. Well, let's jump in. On New Zealand front, I guess a couple of things that have been in the media that we want to talk about, which is what the government are doing in terms of putting some pressure on the big international players who are sort of, scraping New Zealand news, Google and Meta. So we'll delve into that shortly. Black Pearl Group, we had their founder on last week, so we'll delve into that. Then there's a sort of few global topics I'm definitely keen to jump into. OpenAI's ChatGPT doesn't seem to be getting a whole lot of media attention, and I don't know why, but it's just been going nuts on Twitter, and I think we definitely need to delve into that. Couple of other issues there as well in terms of what's going on with Apple and China, but I think the big topic is around crypto because you're both across this field. But let's get started. Google and Meta, they're being forced to strike deals with news media here in New Zealand. We understand in the last 3 months that deals have been cut with RNZ and NZME, but not more broadly than that. So what seems to be happening, according to Broadcasting Minister Willie Jackson, is legislation is now basically inevitable. They're developing that now. What we saw out of Australia was a scenario where I think at one point, Google were like, oh, we might just tap out of Australia, right? When the legislation was initially pushed. And of course, you can imagine Microsoft with their search engine were like, hey, we'll happily cover Australia if Google doesn't want to. Google certainly came back to the negotiating table fairly quickly. But the understanding is around 200 million per year has gone back into the Australian economy, back to those media outlets after they were basically forced to come to an agreement with media outlets. So looking at the differences between New Zealand, maybe we're looking at 30, 40, maybe more $1 million sort of per year that could come back into media once this stuff progresses. So is that a good move? Is this what we should be doing, sort of putting this sort of financial pressure and a bit of a burden on the international players who end up with an incredible dominance? Does it make sense? I mean, you worked for stuff for a period, didn't you?
Yeah, I did. I think a strong local media is of such value to any country, and the reality is, those big Web2 giants, they've taken ad revenue, years ago. So now the fact that they're having to pay for the content that those local media companies are creating at great cost and expense to themselves because they're making money off it, it seems reasonable. The biggest impact, the biggest cost for the local media companies is, their editorial teams. We've seen recently strikes and stuff. Those businesses need support. So I personally, I'm a big fan of this.
Okay. How does it work mechanically? Because you've got all this content, and as soon as it's out there, of course, these big giants will take that, and then they're making money off that. But how can like outside of legislation, how can you actually create systems and structures in place where revenue gets directed to where it needs to go?
So the systems exist. So the news platforms themselves track where traffic arrives from, so they can tell if particular visitors come from a Facebook post or a Google ad or a Google link. So that's a known to them. And on the other side, Facebook and Google obviously track all of the the interaction engagement they have. So because they're monetizing that engagement, they can see how many views a particular post carrying a piece of news gets. They know how much each view is worth to them. So that's where the revenue share model.
So it's kind of like APRO or some sort of royalty system.
Yeah, that's right.
Would be built behind the scenes so that it was clipping the ticket and somehow sending payments. And
that's right. Effectively, you're agreeing some sort of cost per click or revenue share sort of model.
Right.
So the technology exists. It's just whether the two parties are willing to come together to agree.
And is it inevitable that they're going to have to change anyway? Like as we're all moving towards, say, Web3, is it possible that if they don't do something here, they'll create more of an open door for more decentralized content creation where monetization runs on different rails?
Yeah, there's absolutely that view. There's a view that the Web2 giants won't let go easily. I think that the reality is what they're doing is they're monetizing our attention, and they're monetizing it pretty effectively offshore. The local media companies are saying, well, hang on, if you're doing that with the content that we've paid to create, it's only fair that you fund that. So, despite working at Binance, I don't see this as a Web 2 or 3 thing. For me, I think this is about the importance of local media, and businesses like Facebook and Google needing to support that because they're profiting off it.
I think that there has probably been a commonly held view that actually it's the media companies that benefit in terms of you do a search Google News and then you click through to a news item and you go through to a local media outlet, right? And that is certainly part of the case. But I think what hasn't always been fully recognised as just that engagement, how much time people will spend on other platforms where they have taken these pieces of content and effectively monetize them for their own benefit. So I think it balances things up, and it's in that sort of broader context of as a smaller economy where we don't have Netflix in New Zealand. Netflix isn't a New Zealand business. Google isn't a New Zealand business. Meta isn't. All these, these big global players, the Amazons and so on. We could have a very interesting picture in the years ahead, right? You could end up with a scenario if we don't balance out how they contribute back to an economy like ours, where we don't have any local broadcasters, right? There's no Sky. There's actually just Netflix just stamps their feet. Maybe it's a Netflix and an Amazon, and everything is with those players, right? And so we have to kind of work through and figure these things out. And in a similar basis, what happens if Amazon sets up warehouses in New Zealand? They've started to do it in Australia with their sort of dominance, and they decide to drop prices. They kill off local competitors. So I think there's a lot of sort of challenges with the big global players and how we make things work right. So we still end up with a strong local representation and economy in a whole lot of areas.
So on media specifically, so a really strong local media does a few things. The first, it holds local power to account. The second one is it sets the tone culturally for the country. The third one is it entertains. And entertainment you can get offshore. You can get from overseas, but you can see in parts of the States where local papers, local media outlets have died out, and they have what's called a news oasis. You see the increase in corruption because there's nobody keeping an eye on these things. You don't have those reporters turning up to the council meetings, talking about the deals that are being done, talking to business people. You also have cultural identity issues because all of a sudden, people aren't seeing people like them on broadcast media. So there are a whole lot of impacts of removing local media outside, paying the jobs today of the individuals who work there that we'd really suffer for.
I never thought of that. That's probably quite important, isn't it? Because even just that first thing, keeping local sources of power accountable
Absolutely.
is something that we've seen in the media, even in New Zealand, is something that's actually quite a critical function. And sometimes it works better in some seasons than other seasons. And so, yeah, I guess if what we're talking about makes that less likely to happen, then that would concern me.
Think about the
Definitely.
the investigative journalism that you see locally from the likes of NZME and stuff. If that stuff didn't happen, how would we know about some of the things that they uncover? Just wouldn't.
Good point.
Now, last week we had Nick Lissette on, who's the founder and chief executive officer at Black Pearl Group, and they were listing on the NZX, and they launched late last week at $1.25 per share. Now, I found it a sort of fascinating discussion, and I didn't. I knew there must be so much more information around sort of the reality of their business, because I think that the market cap that they were sort of entering onto the NZX at was around 40 million, based on a annual recurring revenue of to under 3 million, shall we say. So I was kind of curious, and then the three of us sort of had a little bit of a look at what had happened. We were referring to an RNZ article that went online on Friday evening that referred to the listing and the drop in the stock from 125 listing price to what was referred to as sobering. Closed the day on $1.08. So when we sat down for a chat here, sort of 45 minutes ago or so, that share had dropped to 60 cents. I just sort of better double check. A moment ago, the stock was at 50 cents.
Wow.
So it's I guess this is where we draw in on you, Darcy. Who
is not all over this at all, by the way, just for full disclosure.
But I guess that we're going to talk a bit about crypto today, but there's aspects to investing, that things aren't always as simple as that we would like them to be. So I'm wondering if you can just share a few thoughts on this without delving specifically into sort of Black Pearl Group, because I know they're not a company that you've really had a time to sort of delve in and read a lot about, but just in the current market, whether it's a tech stock that's appeared on the NZX, or it's other, and I guess a lot of us listening to this show will be very interested in the tech companies, right? And I remember when Sharesies, were starting to really gain attention in the early stages. I think it was the likes of Tesla and Apple. It's the big tech companies that sort of have got a lot of attention. But we've seen things get pretty volatile over the last little while.
Yeah, and I think when the tide goes out, we see who's swimming naked, right? Like that's the famous quote from I think it's Charlie Munger or something like that, right? When it comes to this, we're all told, hey, do your due diligence. This is not financial advice. Do your own due diligence. But when you think about that, when we're going out and doing our due diligence, we are kind of dependent on a few things. Like we're dependent on good regulation, good disclosure. We're dependent on maybe our own understanding or what we've read or picked up somewhere else. So we kind of lean on all these various different, say, disciplines and structures around us to help us inform our views. When it comes to something like this, where you could have bought in at $1.15 and it's now 50 cents, like that's full on, right? So what was a little bit sobering is now a full on crack cocaine withdrawal issue, right? Forgive the drug reference there. I can't think of anything better.
I'm used to these things with you, Darcy.
I'm sure you are. I'm sure you are. So, but like that happens anywhere. Like Dogecoin, anyone, or Cardano recently. Like there's all sorts of ways to lose money, and we can't kind of always say it's up to somebody else to do that. But at the same time, like up to somebody else to make it safe for us, we have to go in there with our eyes wide open and take full responsibility for our decisions. But at the same time, it's really important to understand what those rules are and where to go for advice and guidance so that you can actually do your own due diligence with meaning. I don't even know how you could avoid that. Like if you were able to access that investment, you could almost like lose half the value within 10 days, no problem. And what would have stopped you from doing that? Like it's almost impossible for me to understand how you could stop, like apart from saying, hey, do your own diligence and leave it up to them and hopefully they figure it out. There's a point, right, where you can't actually make it any easier. And that's the whole thing with regulation that I often think about with crypto in particular, is that you can introduce licensing and make all these rules around disclosure, but is it really going to stop somebody from losing money? And should it? Like, is that what the end game is to stop everybody from losing money? Because if we go that far, then no one has a chance to make money as well. Everyone gets the same rate of return. And like that's kind of where this ultimately goes.
I think let's talk about that later. But I think the interesting thing here is you've got a share price that has more than halved in a couple of business days. No one is yet calling for it's the end of the NZX. Shares are over. As an asset class, this makes no sense. This is nonsense. But there are a lot of people whose dollar investment has gone down to 50 cents in 2 days. So I think what it highlights is that all different asset classes involve levels of risk, and diversification is really important. Doing your research is really important. But again, as Darcy said, there's no reward without risk. So we have to be grown-ups and go into this eyes wide open.
Mm-hmm.
But a 50% drop in a couple of business days of a share looks like it belongs on Coinbase, not NZX, but I think sorry, not on Coinbase, on CoinMarketCap.
Well, let's rewind that.
Yeah, on CoinMarketCap. But these sorts of drops do happen in legacy asset classes, as I like to refer to them, as well as new ones.
That's why it's so important. Like it's not always about the tool; it's about what we're trying to do with it.
Yeah.
And just because you get these weird varying results, it doesn't mean the whole system is broken. Like if we thought about that about our dollars and it's gone down by 10% within 12 months, the value our dollars can hold. It's not like we're all spitting the dummy and getting rid of our dollars.
That's right.
So it's an interesting discussion, right? Because there's risk and there's volatility.
Yes.
And we need to be comfortable with volatility. That's actually good. It has to be present for us to get a rate of return. But the risk or the possibility that you could lose it all, that's very different. And so, I don't know. It's an interesting thing, right? Like,
the perception with fiat money is that it's based on gold, but it hasn't been since the 70s. It's not based on anything. That's how you can print more. It's just based on the fact that we think it's based on something.
And most people have that understanding, right? Like it's based on something. So let's just always denominate our valuable things in this thing.
That's right.
Which is just by decree. Someone said it's valuable.
Yeah.
Someone who has a lot of guns, mind you.
Yes,
says it's valuable.
That's right.
We can trust that, right?
I guess there's been some historical scenarios in varying parts of the world where that hasn't played out so well. Now onto Apple. There's been a lot going on in China with protests and riots around the Apple factories, and there's probably two flow-ons that I find quite fascinating. One is that Apple, we understand they're accelerating plans to move production out of China. Now, I don't think that means that anytime soon they're not going to be doing production in China, but India has sort of been starting to pick up a little bit, and look, in India there are strong financial incentives for smartphone manufacturers and other manufacturers to be making their product in India, so that was quite natural. But this seems to be really, it gives them a bit of an excuse, as it were, to look elsewhere. The other thing I found interesting was that there was this communication that was going on through now I'm forgetting AirDrop between Apple devices and China, and of course you've got a government that kind of doesn't like this freedom of communication that we enjoy in this part of the world, and so that's something where, Apple, to be able to operate in China, effectively have to comply with shutting that down when they're told to, which is quite a fascinating sort of scenario to be in. And Apple have really sort of played up the privacy and how kind of good they are, I suppose. Whereas we've got the likes of Google, who no longer actually operate in China, and we don't sort of hold up a flag and go, look at Google, look how awesome they are for exiting this market where they'd because there wasn't sort of freedom of speech and they couldn't just do search and so on how they wanted to. But I think it is actually interesting to sort of step back and have a little bit of a look here at what's going on.
We do, as consumers, penalise companies for staying in countries we don't believe they should. Look at Russia recently with all of the businesses pulling out of there, and what happened to those who didn't. Look at also what happened to Adidas recently when they took a little bit longer than people thought they should have to cut ties with Kanye. So I think people have a lot of power over deciding where companies go, often more so than countries. It's a really interesting balance. The power of Apple is pretty great globally. So it'll be interesting to see if they do decide to exit that market. What would that do to the Chinese economy, for example? Would that leave them more isolated than others?
Must be like a real fine line, though, isn't it? Also with Apple, who need to appeal to their consumer base, but they need to be compliant with these laws, which their consumer base may be at odds against. Absolutely. That fine line, they have to be so careful because they need both. I wonder, like with, say, Tesla being in China, in manufacturing China, like does the Chinese government demand some sort of kill switch on all those cars? Because they've been non-compliant in some other way, so you can't use a car anymore. I don't know, but it opens up all of those question marks. And we kind of, as consumers, look to these brands going, well, I hope they make the right decision, but we don't know. And when they're high value purchases, it's not like you can back up and just start swapping around. I'm not going to use Tesla anymore. I'm not going to use Apple when you've just paid like $1,200 for a brand new phone. You're using it. So it's quite, I think it's fascinating, just watching how these companies walk that tightrope.
It's always been the case, though. In Nazi Germany, look at Volkswagen, AG Farben, Audi, big businesses that collaborated with that regime, benefited from it, and are still around now. Yeah. So it's it's I think this is just the question of our time. It's China today. It was Russia recently. Who will it be next?
Yeah. Now we can't go through this episode without talking about ChatGPT. This is technology from OpenAI, and their GPT-3 technology has been available in quite a number of a huge number of off-the-shelf software as a service products over the last probably couple of years or so. But it's been interesting to just see the rise of these tools to help you write a bit of content, help you write an article, come up with ideas for an article, and so on. But with ChatGPT, it's kind of things have gone next level because they're opening up just direct access to anybody on the planet. They've signed up over 1 million users within 5 days was the headline I read. It's free to sign up. Everybody listening to this should go to chat.openai.com and actually try this thing out because it is absolutely nuts in terms of what you can get it to do. I've tried throwing all sorts of things at it. While we were sitting here chatting, we said write a 500-word article on the benefits of cryptocurrency. You could probably ask it from another perspective. And away it went and wrote what looks like a reasonably well researched, well written article. At Ben's suggestion, we asked it write a heartfelt Valentine's Day card for Tali Rose from Ben Rose, and here's what the AI wrote. So Ben can put this on a card. Dear Tali Rose, as Valentine's Day approaches, I can't help but think about how lucky I am to have you in my life. It sort of goes on from there. It gets soppier and soppier.
Well, come on, keep going, Paul. This is really
okay.
good. Don't
You are
rob
the
people of
most
the romance.
amazing person I've ever met, and I'm
Cheers.
so grateful to be able to call you my partner. Your beauty inside and out takes my
Both.
breath away every day.
Daily.
I mean, you've got to try
Like it
this
knows
for
me,
yourself.
Paul.
It's
amazing.
It's nuts. But the things that you can throw at it and actually get it to come up with, you need some ideas on something. You want a job description, you want all sorts of things. You might
you
just
want to
need
write
to
my wife a Valentine's Day card.
yeah.
Fun.
It only works for
there
your
was
wife,
the mix
though.
up
Yes. Doesn't work for mine.
when we almost asked it to write for a Valentine's Day card from Ben to Darcy, but I realized that was a mix up. There's all sorts of possibilities that can
Incredible
that can come out of this technology, and at the moment you can sign up and try this stuff for free, and it's very, very eye opening. So
what fascinates me about this, I don't know if they have like a dyslexic option where you can actually program it to actually write stuff with if you had dyslexia, but I'm thinking more of the opposite way around. Like this really helps a lot of people who struggle with communication, right?
Hugely. I heard one example. Someone just was quite a capable verbal communicator, but shocking with writing. They hadn't really got their head around it, and they were trying to run a small business. Now they're using ChatGPT. Basically, they give it what they would write. It turns it into something that is a nice professional communication to send off in emails to their clients. So we don't really have time to sort of delve much further into this because we do want to talk a little bit about what's happening in the crypto world. So we will leave that with listeners to go and have a look at, and we will have a link on the post on the website.
Please don't write my wife a Valentine's card, though. I'll cover that.
Well, it's going to have to judge up against what
true.
ChatGPT's done now. So, the other headline that we should mention: San Francisco politicians basically voting to endorse lethal force from robots. So we are in a very interesting time in history.
Some would call it mildly dystopian. That headline, that's a bit spooky.
So go away and read up on that if you are at all curious.
Dogs with guns.
Where the world
Nice.
is going. And just if only sort of Hollywood had given us a taste of of what a future could be like, where we allow robots to use weapons, and we might have a little bit of a
fine. I'm sure it'll be fine.
Yeah.
What could go wrong?
Absolutely not. Actually, let's ask ChatGPT on that.
Yes, we should.
We'll report back on that. So crypto, it's been a pretty crazy year from a crypto perspective. Most recently FTX collapse, and I guess what's been referred to as a crypto winter over the last little while. Darcy, what's your view on how we should respond to this? Because as an investment advisor, someone who talks on your show on NZ Everyday Investor about crypto on a reasonably sort of regular basis, what has this left you with in terms of thinking?
It's kind of like a return back to what you should have been doing the whole time, which is what Ben's already alluded to, that whole diversification word. And I think often when people get into crypto, especially if they're mainstream investors and they dip their toe in the water, they have this natural default assumption, partly because they've kind of been told this, that you're gambling. And so people don't kind of take it with enough seriousness, or they don't approach it with the right headspace, in my view. They think that they're gambling. They think that they're playing around. Therefore, they just put a little bit in there and see what happens, right? But I think the power is in treating it like a mainstream investment asset that works alongside your traditional portfolio. It slots right in perfectly. So if you think about it as just another component in your traditional mainstream investment portfolio, it's just a diversifier to give you a possibility of outperformance without betting the farm on it, then it's okay. It's totally okay. And so you just carve off a small slice, make sure that you don't invest any more than that, so that if it does go to zero, you're okay, deals with it. But take it seriously as well. Don't think of it as a gamble. Think of it as a genuinely legitimate asset, which is here to stay, because guess what? It is. And so if you take it seriously and you have a structure around it, you are going to be fine. Because going into this year, like I lost a little bit on a platform called Celsius. Fortunately, I didn't lose any on the FTX one, but I totally understand what it's like. But the reason why I only lost a little bit and not a lot was because I practiced diversification, not just within the assets that I own or not just within the digital assets, but I practiced diversification on the custody layer as well. Because you can own Bitcoin, for example, like 4 or 5 different ways. You can invest in all the companies that do all the picks and shovels around the edges, or you could just buy the asset and hold on to it directly. So that's kind of what I've been relearning this year. And that's the biggest take home, is that got to take this seriously. This isn't a play area. This is a serious asset for you to do your own due diligence on properly and actually build it in with a strategy rather than just wing it.
Good advice. Now, I mean, they're talking about the play area a bit. I mean, I think there is an element where it is important to learn how these things work, and you can have some play money to kind of do that, right? To figure things out. But if you're putting serious money into it, that's when you need to need to treat it very
and serious
seriously,
money
right?
is a relative thing.
Yeah.
Right. So if you look at all of what your wealth is, apart from the wealth that's inside your home, and it's more than 10% of all your investable assets, you're starting to get into the neighborhood of maybe that's a little bit too much relative to who you are. Right. And it's not like I'm saying, hey, no one should invest more than 10% of their portfolio into crypto. But if you are, you just need to be aware that things can go wrong pretty quick. And, a little dab will do you. Just a little bit of it is actually all you need if it really is the way of the future, right? So that's my 2 bits anyway.
The way we look at it is that, well, clearly we're biased. We think it is the way of the future, but it's new. So we're only a 5-year-old business. Bitcoin hasn't been around for more than 12 years. So it's new. If you look at the traditional financial system, when people first started working out how to use credit cards, deposits, those sorts of things, it's quite complicated. You have to get your head around it. You have to learn it. You have to do your own research. This is exactly the same. The difference is the regulation hasn't caught up to this new industry yet. So before the events of the last few weeks, one of the first interviews I gave in New Zealand was saying, we think there should be licensing for crypto exchanges, because if you've got, we've got 1 in 10 Kiwis in New Zealand now holding some form of digital assets. That's a lot of people. That's only set to grow. So if you've got an industry that's serving that larger portion of society in a financial way, then individuals need to have a way to know who is a responsible player and who is not. And what became clear recently is that without that regulation, you have people doing the right thing and you have people doing the wrong thing. So you end up in an industry that's self-regulated. So we have an insurance fund for our users. We have segregation of funds. Some exchanges don't, and unless you have standards that are consistent across the industry, in order to be a licensed crypto exchange in this country, these are the things you need to do. Then people can't have confidence in that and won't know the difference between the two. So that's why this is a real wake-up call, saying it's time now that we had a crypto license, not just here but all over the world.
Darcy, can you give listeners your sort of summarized breakdown? I know this is a topic that we could spend hours on.
Oh, heck yeah.
But in terms of what happened with FTX.
Oof. Maybe Ben might need to help me out on some of the details, but basically, the best way that I kind of thought about describing it,
because this is a huge collapse. I mean, billions and billions of dollars kind of lost by investors, right?
So you had an institution that was pretending to be a bank, and in some senses, it kind of was functioning as a bank, so it was easy to kind of think about it as a bank. And then you had customers putting their assets on that platform. And unbeknownst to them, I guess, there was a relationship going on between that platform and another entity, Alameda Research, which was effectively gambling with customer money. Let's call it what it is, right? And so when it kind of got out that that's what was going on, effectively it led to a bank run a la 1907 style, right? And so that's why I kind of think we're probably at that point where we're crying out for regulation, almost like a central bank to come and save us within the crypto community, as scary as that sounds. But that event is because of dodgy people doing dodgy things in a digital realm, packaging up traditional finance tricks basically in a digital wrapper. I don't know if that's too esoteric, but it's a failure. It's a bad actor. It's not saying that the rails or the assets necessarily are broken and dodgy and evil and stay away from them. It's just an example that people, even in this realm, are not perfect. And hey, it's early days, but we need to see things get flushed out before, I guess, regulation comes in. Because that's kind of like what regulation would do. And correct me if I'm wrong, Ben, but like when regulation comes in, you're trying to kind of almost set the tone of how the ecosystem operates within a somewhat perfect state, right?
Yeah, that's right. You set rules that everyone has to conform to in order to play in that market. So, for example, you might say this is the amount of capital you would need to have on hand. You need to have your customers' assets tracked 1-to-1 in your reserves. You need to show that you have segregation of client funds and investment funds, if there are any. You need to make sure that you have full identification of every individual. All of those sorts of things that you do. That's why the processes are similar when you go into banks. The application processes are similar because they're regulated. Whereas without that, you can just pretend that you're a crypto exchange, and to someone who doesn't know, they might think that you're just as credible as the other one. So that's why you need licensing to give consumers understanding and kind of comfort around who they're dealing with, but also other businesses in the market. Because right now this is an unlicensed industry. We're registered, but we're not licensed. We and most of the other crypto businesses in this country can't get bank accounts because the banks don't have comfort around crypto businesses because there isn't a license. So it's all part of a maturing industry.
And I guess the more you make it a little bit scary and a little bit too different, the more you push things further into the shadows, right? Where
I think that
stuff can't happen.
I think that's right. I think my view, and clearly I'm probably slightly biased, is the traditional industry makes a lot of money, and it's got a vested interest in not accelerating the uptake of new technologies because it's making quite a lot of money.
Yeah.
So a lot of the news that you see overseas in particular is from CEOs of quite large banks who aren't that keen. So I think you got to do your own research.
I'm keen to know where that goes. Like if we get that conversation going off air, right? Because like that there's a lot of theories.
Well, I'll tell you on air without naming them. There was the CEO of a major bank who said that Bitcoin was a Ponzi scheme. Fast forward a few months, and that self-same bank has developed its own digital coin and is doing cross-border transfers on blockchain. So I would suggest that you've got a legacy industry, you've got a new coming industry, and there's going to be a bit of friction between those, as you would expect. But that businesses like mine need to fight that fight.
Yeah.
Now we've got those two types of sort of exchanges: a custodial versus non-custodial versus FTX. I would put them in a different category. Where does Binance fit in, and what does that actually, what does that mean? Are there risks associated with with the way Binance operates, for instance?
So I would say, and we would say, there is no such thing as a non-custodial exchange. That's a broker. So if you buy and sell, that's a broker. An exchange is somewhere where you can buy coins, store coins, trade coins. And that's what we do. So yeah, look, we do think that we're different in terms of the way we operate. We have segregation of funds. We were one of the first to publish the addresses of where we hold our reserves in different coins.
So that gives a lot of transparency because anyone can go and have a look and see what's going on.
You can go and have a look and see exactly how much is there.
Yeah,
absolutely right. We also about 4 years ago, 2018, we set up a fund called the SAFU Fund, which is it's $1 billion fund, which is there. It's a self-insurance fund, effectively, for our users who might get hacked. And that's something we've kind of done off our own bat because for us, we're a young company. We're 5 years old, but we're here for the long term. So for us, doing things right is really important. However, that's not the case for all players. So around the world, we're one of the most licensed and registered exchanges. Wherever there's a license, we work towards that, and wherever there isn't, like here, we advocate for one. So we're really pushing the industry to mature, whereas others like FTX, for example, talked a good game, but actually the realities turned out to be quite different.
And that's the challenge, isn't it? Is without the legislation in place, without a consistent approach, folks aren't going to necessarily know exactly what they're dealing with. And I mean, you think of in New Zealand, if you're dealing with a lawyer or an accountant, and you send funds to them, they go through a trust account. That in theory that doesn't get touched, right? And that's an independent account. And so it seems appropriate that sort of thing should be a baseline for these types of firms.
Yeah, I mean the current approach is we've got registration with MB as a financial service provider for those businesses who are on the ground here and serving New Zealanders. So that means that if you're dealing with an exchange, for example, and you find that they are on the FSP register, we are Invest by Bit, trading as Binance New Zealand, then that means that that they work with an external disputes resolution scheme. It means that they report to the DIA for anti-money laundering. They work with the New Zealand police on suspicious transactions. If you work with an exchange, if you invest in an exchange that's offshore, that has no presence and no links to local regulators or law enforcement, well, there's a lot of risk, more risk there.
Hey, with going back to the custodial piece, like say, think about this in terms of how KiwiSaver works, where you're putting money somewhere, where you're putting it with a KiwiSaver fund manager or a retirement fund manager.
Yeah.
They make the investment decisions, but the funds are actually held separately with a separate custodian, in no way connected to that fund manager. So with what you guys do, you mentioned that you're publishing the addresses of where the assets are held. Proof of reserves. Do you think that as part of, say, licensing, there should be a move to make it an independent entity that controls those addresses as well?
I mean, I'm probably not qualified to talk on that. What I would say is the way we store our crypto is the way that lots of users store crypto. So we have hot wallets and we have cold wallets. And we've actually developed an industry grade custodial solution for our cold wallets, which we now offer as a product in the market. But we also bought a cold wallet solution called Trust Wallet, so some of our users use that. So the custodial side of things, there are advantages and disadvantages to holding it in your own wallet versus holding it on an exchange, and that comes down to whether you want access to it to trade, whether you want to go through the hassle of having a seed phrase or just have a username and password, how much you've got, what you're going to do with it, all of those sorts of things. So, we've got a lot of content that we help people understand the best approach for that, but it's from one person to another, it's different.
And I think the key is that if you're getting into this stuff, have a play around and figure it out, but you do need to understand that because there's a big difference from a risk profile, perspective, or you at least you need to understand that stuff. Certainly, if we look back historically, that there are some pretty important considerations, and you can make those own calls based on where you're at, how much is there, all the other factors that are relevant.
So one of the things for us, again, this is a new technology, and people need help to understand how to kind of navigate it. So we've got this thing called Binance Academy, just a load of content, and one of the first things that you see on there is what's a cold wallet, what's a hot wallet, should I have my own, pros and cons, all those sorts of things. We don't advocate for either. We let people make their own decision, but it is really important with all this to get your head around it first before diving in, because it is new. There's lots of opportunities, but there's lots of risk too.
And look, we've heard of people on both sides sort of losing, like, oh yeah, my keys were on that hard drive that's gone to the dump, and all these sorts of things. So there's some important
storing
stuff
your passphrase on iCloud photos.
Don't
do that, please.
I think what's interesting is it's the volatility is relative, right? So we were talking before about a share that had lost half of its value in 2 business days. Over that same period, Bitcoin's grown by 1%. So there's risk and there's reward in all asset classes. So in crypto, yes, it's important to do your own research, but I can't think of an asset class that isn't important.
Well, that probably brings us to an end. We're sort of out of time. Actually, I should mention, going back to ChatGPT, we did ask ChatGPT around FTX. And if you go to my Twitter at Paul Spain, you will see what was the question that I asked and what the answer was, and it might sort of shock you. So I guess there's a little bit of a warning here.
It's definitely not financial advice from ChatGPT.
Yeah, in terms of ChatGPT and whether it gets stuff right. I also asked it to write up a bit of a summary around the New Zealand Tech podcast, and it wrote this beautiful summary. But I was scratching my head when it referred to the second host, the name just didn't sound familiar to me at all. It was like, what? Where did this come from? We call it a silent
partner. He's been there the whole time.
So as I think Joella might have suggested, maybe there will be a co-host in the future who I have yet to meet or have any knowledge. Is that his name? So, hey, interesting times ahead. But yeah, definitely go and check that out. Ben Rose, where do people track you down if they're wanting to get in touch?
Twitter at Mr. Ben Rose would be a good place.
Excellent. And Darcy?
I'm at Ungaro Darcy at Twitter as well.
Excellent. Well, thanks everyone for listening in.
Wait, what about your Twitter name? We just renamed you, right? Was it Mr. Robot 69 or something like that? No, never mind.
We'll put that one aside.
Okay.
At Paul Spain.
I still get invited back though.
Amazing.
Thank you to our show partners: Vodafone, Spark, 2 Degrees, HP, Gorilla Technology, and Deal. And we'll look forward to catching everyone again on the next show next week. Just something to remember, if you want to catch the show very, very fresh, definitely follow me and NZ Tech Podcast on LinkedIn. And we are across any other platforms, depending on what you like to watch video on. So we're on Twitter, YouTube, and Facebook. And so if you want to catch those live, follow, hit the bell, or whatever the other mechanism is, depending on the platform, to get it super fresh. We're wrapping up here Tuesday afternoon, 6th of December, 3:36 p.m. But of course, we know most of you will be listening probably Wednesday morning with the audio download. But if you want to feel you're right on the cutting edge, then definitely make sure you're following for the live video. Thanks, guys. Really appreciate it.
Thanks for having us.
Thank you. Cheers.
Cheers.
The New Zealand Tech Podcast, brought to you by Gorilla Technology, proactive and strategic IT.